Check, is this thing on? I think it's on. Yes. Good morning. Welcome to the morning show, everybody, here on Stock Market TV. Hey, look at the slides. Didn't mean to do that. Take this off the screen. Welcome to the morning show. A lot going on today. We're in a fast market. Bottom line, on the 9th day, God rested and stocks went down. That's the story of yesterday. Maybe they'll go up today. Who knows? We got a lot to discuss in retail earnings land. We had TJ Maxx or TJX. We had Macy's. We have Target this morning. We have Walmart is saying bye-bye to their JD.com stake. We'll talk about that. Well, Caleb Franzen on the show, talk about crypto with him. A lot to discuss. He sent over quite a few charts. We'll have Mary on in about an hour or so. That is the plan. So let's get the show on the road. Where is my intro? There it is. What's up, chat? Here we go.
All right, we out here. What's up, everybody? Happy Wednesday.
Hey.
Hello.
I got a good one. You ready? Can you throw up the first slide? I was at a parent-teacher conference. What's up with this three panel thing you got going on today?
You know, I kind of like it. I think we should do it more often.
Yeah, it's not bad. I kind of, so this was at preschool parent-teacher conference last night, and I see on the board there it says preschool rules: be nice, be safe, be clean, and be a good listener. Oh. I was like, I got an army of people over on the Twitterati that could really use some of this advice, so I just shared it with everybody.
Rules. You're right. Those are great internet rules.
Good advice, right? You want to be nice. Like, don't be an asshole.
Yeah.
So that's number one. Number two, be safe, right? Like, don't dox yourself, I guess, right?
And password protection.
You do that.
Password protection.
To invest in a good password manager.
Don't go out trying to pick fights with people like me, because that won't end well for you. We know how that usually ends for people. You want to be clean. I mean, mix in a shower. I mean, some of these perma bears, I mean, they're just some dirty, stanky folks, right? Mix in a shower and be a good listener. I thought maybe number 4 was probably the best one. I think that even the three of us are actually pretty damn good listeners. I'll give us that credit. And I still think that we can be even better listeners. Would you agree with that?
Always.
Yeah.
Sure.
I agree with Dawson. Number 4 is the best
follow
one.
Number 3 a little bit more, I think, also, right? It gets awfully sweaty and humid down there in the Keys this time of year. Right, Strazza?
Yeah, that's fair. Very greasy.
Gold bond season. That's what we used to call it.
Gold bond season? That's funny.
Gold bond season.
That's funny.
All right. Well, that's what I got from parent teacher conference last night. It was lovely. It was lovely.
Cool.
Shall we?
Sure.
All right, markets up because in bull market stocks go up a lot. Historically, that's a thing. You got the Dow futures up 70 points this morning, Mr. Strazza. How are we feeling about that, my man? 70 points on the Dow. That is 41,000 for the Dow Jones Industrial Average. S&P 500 futures 5630, up 12 points on the day. Nasdaq 100 futures up 0.25%, getting close to that 20,000 again. 30-year bond futures hanging into 125, flat on the day. Crude oil flat, down to 73 on the crude oil. Copper hanging in there strong, fought that $4 level, now pushing 420, up again 0.5% on the day. Gold flat at 25.50. Silver up 0.5%, still slightly under 30, with the volatility index at 16. And over in funny money land, you've got Bitcoin pretty much flat on the day, up 400 points, 59,500. Ethereum just under 2,600, flat on the day. Solana 142, flat on the day. Binance down 3%, 554. Total crypto market cap, Spencer Israel, 2.05 trillion in market cap, with the Bitcoin dominance up above 57% for Bitcoin. What stands out from the futures, Mr. Strazza?
Silver, dude, this is a big level. This 30 level. Gold completed a multi-year base earlier this year and has already rallied to its first target. But
And by
silver
multi-year, do you mean like a decade?
completed that also, but there were two bases, right? So I'm talking about the bases that go back to 2020. And silver's just completing it now, taking out those 2020, early 2021 highs.
What does it mean for precious metals when even Steve Strazza, of all people, Mr. I will never buy a gold stock, is buying gold stocks?
I never said I would never buy gold stock. It's not something I like try to do. I'm not out here like looking to buy gold stocks. These are
You've made it very clear over the years, not just recently, that it's just not something that you want to do, right?
They're traditionally just very bad businesses.
Yeah,
We talk about
I've got a chart for you guys.
we talk about how most stocks eventually go to zero. Geez, gold mining stocks, I can't imagine what those numbers are.
I love how Strazza, this is where we're at in life. When Strazza's DMing me the other day, asking me for that quote, Strazza's asking me for the Mark Twain quote. He's like, how does that quote go again? Gold miners are liars standing next to a hole in the ground. Right? Is that
Have conversations with some of these gold mining CEOs. I used to have to do it. I would write like deep dive reports on them. I would talk to some of these CEOs, and what an experience that was, just talking to these guys. It's incredible.
the best thing I've ever heard is my boy Tommy Humphreys. Tommy Hump, shout out Tommy, out in Vancouver. He doesn't even refer to them as stocks. He's like, I have six
Stories.
core holdings. I have 6 stories that I've invested in. He calls them stories. Like, he doesn't even call them companies or stocks. He literally just calls them stories. I was fascinated by that.
A lot of them are. They're literally just holding companies, and they own property in Alaska, and they're not allowed to drill there, and they're like fighting with environmentalists and regulators, just trying to get some sort of approval. But like the business does nothing, just owns a piece of land.
All right, let's show the folks what we're talking about, folks. If you have not seen a long-term chart of gold, this one really tells the story. This tells 2 stories. Speaking of stories, not that one, not that one. Give me mine. Give me the long-term gold.
That one tells a story too.
That one tells a story too. We'll get to that story. There's so many stories with these golds.
Stories.
So many stories, man. It's like fucking Mother Goose out here.
All right, tell me this story. Tell me this one.
So there's 2 bases. So Strazza's talking about the multi-year base. And as you can see there, over the last 4 years or so, 3-4 years, that was that multi-year base that Strazza is referring to. But when you zoom out, now you're looking at a 14-year base, 13-year base. Like, so you got like a monster decade-long base. Then we got back to those levels. You know, I don't want to call it a cup and handle. Sure, let's call it a cup and handle. You know, you got your big cup, you got your little, you know, rest in peace, William O'Neill. Shout out, Bill O'Neill. So you got your big decade-long base, and then you've got your smaller 3-4 year base, and that's what we have here. Who's calling me? Don't they know? Don't they know what's happening?
Doesn't that annoy you when people call you during the morning show?
Dude, what are they thinking? Have I ever done that to you? I think I've done that to you.
You call me every time I do the Hot Corner show on Wednesdays.
I know. Well, I just want to talk to you, you know? All right. So throw the next one. Let's see the other story.
Uh-huh.
So here's a short-term look at that, right? So this is that base that Strazza's talking about, that 3-year base, right? And look at that breakout. I mean, these Fibonacci extension levels. I mean, people are like, oh, the Fibonacci, Fibonacci, Liberace, whatever. I'm like, all right, bro. I mean, you don't have to use these levels, but clearly the market cares, so we will too, right?
So the more this move sticks, and this is what I was talking about, where one target has already been hit, the more this move sticks and moves, higher towards its second target, don't we have to look at charts like silver, like I just talked about? You mark up silver right now, you could draw the same formation, but we're where that last red arrow is. We haven't even broken out of the box. So is it not the right move to make to say, hey, let's catch up trade here, and maybe we buy silver instead of gold, or maybe we buy gold miners instead of gold, and basically just bank on the same pattern playing out and then targets being hit in those spaces? Or no? Why
don't we take a look at that? Look at slide 6, Spencer, the new slide 6. By the way, and as Spencer gets this chart up, I just want to reiterate that Steve Strazza is one of these people that doesn't want to waste his time. He's one of these people where if he doesn't care about something, he's going to tell you. He's not going to look at it. You know, I'm one of those people too. But you've been more obnoxious about this. I don't care. I don't have time for that sort of thing. So for someone like you, who's going out of their way to kind of eliminate noise, things that out of the way, you got those Fibonacci levels on all those charts. You wouldn't be doing that if you thought it was wasting your time now, would you?
No, absolutely not. Listen, I like buying things that are trending. And also, the way I think about gold is my portfolio this bull cycle has been very correlated in risk assets that are all going to do well or all do poorly together. And frankly, at this part of the cycle where things are getting, extra messy out here in these markets, I want less and less correlated assets in my portfolio. Gold miners, I think, or even gold or silver, they give me that. Right? They're going to be less correlated to the rest of the risk assets that I own. I like that.
All right.
The same with
Now
real estate.
Go to the next slide, because you were specifically asking me about the relative strength of silver over gold. And I think that this next one, Spencer, we're at the lower end of that silver gold ratio.
Yep.
Right?
We have, and then we have an overlay too. Sam, you want to throw in your overlay chart?
But aren't we at the lower end of this range? Like if silver's going to out, like listen, when you zoom out and you look at charts of precious metals, when precious metals are doing well, gold's doing well, silver's outperforming. It's just what it is. And when precious metals are falling apart, gold's getting slammed, silver's getting destroyed. That's just how these things trade.
Do people overthink this ratio though? Do we give this ratio too much weight? Because look, this ratio would kind of suggest to you not to be in gold the way I'm looking at it, right? Like if you're waiting for confirmation for this range to break out in favor of silver, you're already going to have missed a couple targets in gold.
I think it comes down to time frame, Strazza, right? I think that when you zoom out longer term, these long-term secular trends see silver as a leader, but I think in the short term, it's messy. It goes both ways. So I think it's a time frame thing. If
So do you own silver? Do you own silver? Do you own gold? Do you own gold miners? Do you own all three? Like what I'm
trying to go to the gold miners. This is a good question because so far it's been gold has been the best place to be, not gold miners, not silver. Throw up slide 5, Spencer, please. Yeah. So, gold's gone on to make new all-time highs, and gold miners are just wow. I mean, even me, I would have told you, listen, if gold is breaking out of a 13, 14-year base, how are the miners doing? I would have said they're probably doing better than they actually are, right? So I would have been wrong on that had you asked me. If you would have said, gold's going to do this, what are miners doing? I would have said still below their 2020 highs. Yeesh.
I'm along some GDX calls too, but I think for a group like this, you build your own basket. This is a build your own basket subsector. We've talked about this so many times on the show.
Like biotechs.
Yeah. I like literally, are they not very similar in a way that there's going to be huge winners, huge losers all the time in biotechs? Gold's the same way.
In both cases, they're definitely lying to you, right? In biotechs, they're telling you stories about how they're going to save the world and cure cancer and all this stuff, and they never do. Right?
Very similar.
Yeah, very similar. In this case, they got some gold mine in Chile. These motherfuckers probably never even been to Chile.
Get tricked into buying some warrants in like a junior gold miner one time in your career. And it's a great lesson to learn. Happened to me.
Yeah, and well, I mean, I got some little guys in there mixed in. I've seen some huge winners, and this goes back in the 2000s when many of you guys were in diapers, and I was such a gold bug. The first 10 years of my career, I was a gold bug. It was a good time to be a gold bug. It was cool. It was sexy. Gold bugs were making money. It was a bull market in equities, and gold was still outperforming. I mean, everything was working for the gold bug community. And I thought I was the man. I was like, oh, this investing stuff is easy. You just buy gold and just ride it to the top, right? And then I'm on the phone with my homies out in Vancouver, and they're telling me about their 100 baggers and their 200 baggers. I'm like, what? I'm up 80% in this Newmont, and I think I'm a hero. 100 baggers. I didn't even know what a 100 bagger was at that point. So let's just keep that in mind too.
You pick the right ones in the junior mining space. Oh boy, that beta will be real.
I have some very, very wealthy friends in Canada that have hit on some of these.
Yeah. So look, I love this. Some of the names in here, I'll just throw out some of the names that I've gotten involved with over the past couple of weeks. I'm in the IM Gold. I'm in the New Gold, IAG, NGD, AU. I love the Alamos Gold. We love the Ego. Alamos Gold is out here
I love
about
just
to make new all-time
I just
high.
love how I am gold just owns it. Like
I am Gold.
I am gold, and then capitalizes the I, right? You know what I mean? Like that sort of thing makes me laugh. Like I love that sort of thing. Like, you know what? We're just gonna call this company I am gold. That would be like, like us starting a company would be like I am charts.
There's some great names, great company names in the gold mining space. For sure.
I like how Wheaton Precious Metals, silver was so
I'm-
shitty for so long that they just took silver out of the name altogether. Now it's just Wheaton Precious Metals, hoping like we forget,
We're involved in the Wheaton, we're involved in the Agnico, and I have a feeling we'll be involved in more of these names even further down the cap scale, like JC's saying, as this bull market progresses. But I think the writing's on the wall. Gold moved first. I think you could basically anticipate a similar breakout coming in silver. I think GDX eventually looks the same and breaks out of its multi-year range as well. It's got some more work to do there. But in a tape where a lot of things are struggling, these stocks have been up like every day lately.
I was looking at some healthcare stocks, some of these drug makers.
Of course you were.
Why would you say of course I was? Is that something that I do a lot?
Look at healthcare stocks.
Well, sorry. I don't know if you heard. I don't know if that memo got all the way down to Key West in the middle of hurricane season. I know maybe the mail is slow down there. But healthcare, the sector you see, is making new all-time highs, breaking out of a 3-year base.
Yeah.
And I don't know if you heard, but this is actually the second largest weighting in the Dow Jones Industrial Average, which is the world's most important stock market index at 12%, coming in hot at 19% of the Dow, coming in hot at 12% of the S&P 500, third largest weighting, right? Third largest weighting.
Yeah.
So is this not a big deal? Is this like a bearish development for the equities market?
There's a lot of cap weight going on here, right?
Oh, that's a good point that you make, because the equally weighted version of this actually looks exactly the same.
No, it doesn't.
Oh, yes, it does.
I'm looking at it right now.
Oh, yes, it does. Mr. Spencer Israel, if you wouldn't mind, can you throw up the new slide 1, please, just to show Mr. Strazza how on an equally weighted basis this healthcare index looks just as strong. I mean, wow, how impressive it is when you broaden it out and you eliminate that heavy market cap weighting in a J&J or a United Healthcare or something like that, and you actually equally weight the entire thing. Woo! Look at that base, baby. Look at that base.
So these two look exactly the same to you, or has one broken out and the other has not?
Yeah, one has broken out and the other has not, and they look exactly the same. It can be both, you see, right? Chat, can we get a verdict here? You guys want to weigh in? Do these not look exactly the same? Are you not entertained? They look exactly the same. The market cap weighted version has broken out. The equally weighted version looks like it's about to break out any day now. Can I get a witness? Can I get an amen from the chat? Come on. No, Strazza? You're going to fight me on this? They don't look exactly the same? You're not impressed by the equally weighted version? Come on.
One is broken out and the other one has not broken out. I don't know what's confusing here.
We live in a market cap weighted world, but you are the one who told me that on an equally weighted basis, right? Come on, guys. Caleb's giving me an amen, right? Strazza's a big fan of Caleb, so that vote carries more weight. See what I did there?
And I'll bet small cap healthcare looks exactly the same too.
No, because it's a bunch of biotechnology stocks, and you know that. So I like how you tried to set me up there, but you know that I know what you're doing there, you see, because I actually do the work around here, remember?
All right, so
the small cap healthcare does not look like this, actually. That is fake news, Strazza.
Let's try to figure out how to play this. So you get to pick one subsector.
Dude, European drugs in Europe. That's how to do this. I'm telling you right now, man. Look at this AstraZeneca. Look at this Novartis. Can you throw up this Novartis? Look at this base, bro. Come on now. $230 billion Swiss drugs. It's not just chocolate and watches out there, Strazza. They're making drugs too. Come on. Shout out to the Swiss.
All right. Hey, look, I'll give you that one. That That sounds like one of the better groups to me too. Do you think biotech?
European drugs, baby? Let's go. A lot of
Yeah,
drugs
they
in
look
Europe.
better, at least better than the ones we have here in the United States. Do you think biotechs are ready or not quite yet?
I gotta tell you, I like the small cap story. Regional banks, biotechnology, small caps. I think trannies are in that same boat. I understand they're not like small caps per se. They're not like Russell 2000 stocks, but they move with the Russell. They're moving together. They underperform together. They outperform together. I don't know if anybody has an answer for me there as to why that's the case, but I'm like grouping the transports with small caps, biotechs, regional banks. Like, to me, it's a very similar trade. Would you push back on that, Strazza, or you think I got something there?
I think they're similar in the way that they're lower quality businesses than the businesses that are represented by the S&P 500 and NASDAQ 100. So maybe that's why they're chronic underperformers. More cyclicality there as well. A lot of cyclicality there.
Throw up slide to the new here. Let me just throw up the first two slides, Spencer. So this is a scan that's near and dear to our hearts. This is something that Strazza and I really thought through a lot. Go to the next one just to show the we'll get back to the biotech now in a second, but this is the 2 to 100 club. So these are the stocks that we think can be the next $100 billion companies. And we made it so that it is virtually impossible, like almost impossible, for the next $100 billion company to not come from this list, right? Like, is it possible? Yes. Is it actually going to happen that the next $100 billion company doesn't come from this list? No. We made it so that they have to go through here. It's a prerequisite to get through this list before you could become the next $100 billion company. These are stocks between 2 and 30. So, like, don't be like, well, JC, this one's at 99, bro. It's going to hit 100 before that. Yes, thanks. So these are specifically between 2 and 30 billion, right? So on the way up, not like, oh, they were at 200, then they fell to 75, now back. No. These are on the way up. These are stocks making new highs. There will be $100 billion companies coming from this list. And, Strazza has done a great job of kind of reiterating the types of stocks that are on this list that are not, no utilities or staples or, those types of stocks can't scale to $100 billion. You're going to find biotechs, internet, semiconductors, software, medical equipment, that sort of thing. Can you go to the Verona? So this is a small cap. Technically, it's a mid cap, depending on who you ask. For us, it's a small cap. Verona Pharma. This thing, VRNA. Look at this base, man. Huge base. What are we thinking here?
I'm thinking that the insider buying in biotechs just continues to stand out. We got a nice new biotech popping up on the hot corner list literally every day.
Yeah, but Strazza, is there an element of the fact that there are just so many biotech stocks that there's just going to be more of them on this list? Or do you think that there is real flow into biotechs because they have been underperforming,
It's more than usual. It's more than usual. I think, you see more insider buying typically when things are really washed out, and maybe biotechs, different from a lot of the broader market right now. A lot of these stocks are still in big drawdowns. And you're seeing buyers come out, insiders come out, buy some base breakouts, buy some of the strong ones, buy some of the weak ones too. Like, we're just seeing it across the board in biotech. It's more than usual.
Can we talk about rockets and robots?
Yep.
Yeah. Also, Caleb, the SMCI used to be on the 2 to 100 club. It's already graduated from that.
It might come back.
Hey, now it's like right.
Ouch.
It's like right above the the threshold of like 30-35 billion. It's right there. But at this point, Caleb, they've graduated.
You guys should make it.
That's
actually
a good thing. That's when they
2
do
to
that.
100 to 2. That's the next club you guys need to make. 2 to 100 to 2. Let's bring Kenny on.
All right, please.
It's been a long time coming. They ain't come from my club, they took it. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Kenny Glick in the house.
Did I hear you say the word base? How low could you go? What's up?
It's all about that base, base on base on base on base.
Ooh, I haven't heard that one
stacks
in a
on
while.
stacks.
What's going on this morning, people?
I gotta
Rockets and
tell you,
robots.
Kenny, you know, people love fighting trends, don't they?
Oh yeah.
They
Oh
love
yeah.
fighting trends. They
I
really,
got a
really do.
memo yesterday that whatever that crash was all about was absolutely fake. There's no such thing as yen and or carry, and there's
It's a
nobody named
fugazi
Carry.
currency.
Yeah, it was just a an algorithm that they tried to implement, and it went haywire. So now
Yeah.
we're good. We're good for, I'm saying, 3 to 5 years straight up, right? Dow 250,000 now, maybe. Let's all by the
Dow
back.
250,000.
Sure, why not? In our lifetime, for sure. But
Man.
does it matter to us each day when you got Lunar, right? What that
All right,
stock
let's
did
talk. Let's
yesterday.
talk. What's moving?
Lunar. I mean, that was absolutely incredible. That was a lot better than I thought it was going to be. You had this triple top break at 510, and you ripped to about 612. So that was exciting. ASTS took the day off, and the money went a couple other places. But I'm looking at Target. Going woke, going broke, that whole story, is that still a thing now? I'm not sure, but Target is up huge. And when I see a stock up this much, I'm looking to play a little fade on it as it approaches 167.50. But considering how beat down this name has been and how this is a massive power gap, I'm just gonna chill. I'm gonna see what happens, because it could look, above 166. Sorry, 165.50 is pretty important. You might be looking at 170 on this stock before you have any sellers.
And
But
this, if you go woke, you go broke situation. Target is one of those.
I believe it was. I think they were
Like
selling.
Disney.
Yeah, they were
Disney,
selling. They were
Target.
selling rainbow bathing suits, and everybody got bent out of shape. I don't even know the story. And by the way, speaking of not knowing the story, man, I have stayed off the internet and not watched the news for like 7 days. I've lost 4 pounds. I'm feeling a lot better about life, and I'm just in a good mood. I'm telling you, try
Kenny,
it.
why the hell were you watching the news in the first place?
Because I'm a loser, and my wife loves the news. She can't get enough of the weather. Every 3
Ugh.
minutes, the weather hasn't changed, hon. Here's how you check the weather: go outside. Go outside.
Good advice. Good. I'm sure she's thrilled when you tell her that.
Yeah, every time too, for 25 years.
She knows who she married.
Yeah, I don't know if she.
Let me ask you this. So when you think about these targets and Disney and like Anheuser-Busch and like the go woke, go broke sort of trade,
Yeah.
do you think that builds like an inherent catalyst? Because like you've got like Republicans that are too sensitive and there's like a squeeze there? Like, do you think that's like an inherent catalyst or not really?
Absolutely. Again, when the shorts get a little bit too comfortable, that's when you have these big moves up. So again, I agree. So, again, that's why I won't look to play this fade unless it really gets something going on the downside. So I'm not going to buy it because I don't buy stocks that are up 70% in the morning, but I will try to play the fade. But back to the bigger picture, we actually went down yesterday. UVXY gave us the okay to say we could short the market.
First of all, who's we?
Oh, the room, baby. My pack of psychotic traders that I'm hanging out
Hold
with.
on. So the stock market was down. QQQ was down 0.21%.
I know. Crazy.
That was a big drawdown yesterday, Kenny.
Yeah, we played it correctly. UVXY.
Oh wait, the S&P was down 0.16%.
I know. Stop the presses. Right.
Stop the presses. The Dow was down 0.13%. I mean, wow. What a scary sell-off that was yesterday.
Scary. I'm thinking we're back into that mode of like where it was just June, where slightly up is the new down. And until that changes, you just got to, go with the flow. And I am not going to fight this market. So
give me another name. What's on the moves?
The other one's TJX. So
Yeah.
again, special place in my heart. Again, I grew up. Was it TJX, TJ Maxx?
Yeah.
The only time I had any resemblance of designer clothing was when my parents would bring me down to Florida to shop at a TJ Maxx. I grew up broke, and it was fantastic. That's why
they didn't have TJs in Brooklyn.
We didn't have them in Brooklyn. No, it was only in Florida. We'd go visit my grandma, and it was a big day. It was an event for the Glick family. We'd go there, and I'd actually get some like clothes that were cool 2 years ago, my mom would say, nah, all the kids are wearing this. And I'd go to school and get mocked anyway. But I felt good for about an hour before all the girls started pointing and laughing at me. But,
I have to own TJ Maxx because as a hedge against my wife's spending habits.
I
think she's fucking there right now. If I'm
I still don't hate the store. They actually have, when rock and roll T-shirts became fashion, you were able to get some cool Dead shirts in there for like $15, or I got a Ramones T-shirt in there for like $12. So I like it. It's just not a lot of volume. I'm just waiting to see what happens at 120. If it gets to 120 and it can't get over it, I'll look to play the fade there too. So again, I'm just stalking. And, it's been a really good week. Monday and Tuesday were phenomenal trading days. And, we let the trades come to us. If nothing develops, we just sit here and sing songs about space. And then
speaking of singing songs, best Ramones song.
Wow. Well, Bonzo Goes to Bitburg's my favorite, but Afraid to down the basement. I mean, we could talk Ramones all day. That's my favorite band.
Maria Bartiromo.
That's Joey's solo project. But yes, that was phenomenal when he did that song. What's happening on the stock exchange? All right, guys, I'm out of here. See ya.
All right. I just learned that in America we have TJ Maxx, right? In Europe and Australia they have TK Maxx. Don't know what that's about.
Ooh.
Also, owners of Home Goods and Marshalls. You guys ever been to Marshalls? You should go. It's wild.
I'm definitely never going to do that.
It is wild. There's clothes everywhere, all over the racks and the floor and the ceiling. It's nuts, man. Just check it out.
Toys R Us, a couple days after Christmas, we used to go there. It would just be chaos. It was insane. They were just giving stuff away at Toys R Us.
That's it.
All right, brothers.
See you, Kenny. See you in the room.
And the holding company that sits below TJX companies is really clever here. Marmax. Marshalls.
Oh, Marshalls. I got it.
Marmax Holdings.
Big brain. All right, shall we talk to Mr. Caleb Franzen?
Here, drop this link. We'll bring in Caleb. Drop this link in the chat, Spencer, for everybody who wants to watch the Maria Bartiromo song by Joey Ramone. Maria Bartiromo. Have you heard this song, Strazza? It's very catchy.
I have not.
It's a very catchy tune, and it gets stuck in your head. So I apologize ahead of time to anybody who hears the song, but I'm going to have it stuck in my head. So screw you guys. You're going to have it stuck in your head too. That's how this works.
Wonderful.
Everybody suffers the consequences of Joey Ramone.
All right.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Caleb Franzen, how are you, buddy?
My man. What's going on, Steve?
What's new? You still in the United States?
Yeah. Southern California, Santa Barbara.
Very cool. We'll be out there. You should meet us at either Future Proof or Stocktoberfest.
That's mid-September, right?
We would all
Future Proof?
Yeah, we'll be at Future Proof for a couple days. We won't be there for the last day.
Okay.
And then coming back the next month.
Nice.
You're not
swing down.
You're not far from either of those places.
I'm probably like an hour and a half away. Yeah.
Yeah. Ping me after.
Okay.
You should get involved. It'd be great to see you. So Listen, a lot to talk about.
Yep.
I know you sent plenty of charts.
Yeah.
And I just turn it over to you. Why don't you tell us what you're seeing, what you're thinking, what you're feeling about all these charts?
Yes. Let's just start with the S&P 500, and then we'll segue into a chart that I have on that. I think right now I'm feeling pretty optimistic overall about things. This V-shaped recovery has been really strong as we look at price action over the course of the past week and a half. We've seen a lot of broad-based participation, momentum thrust, so on and so forth. I know we were talking on Twitter Spaces, I think it was last Tuesday, and I was talking about a lot of quantitative improvements that I saw that were taking place, and we've just kind of continued to see things expand to the upside since then. And so specifically, there's two things I really want to point out. The first is when we look at the internal components for the S&P 500, we're seeing net new highs across three major timeframes. So whether we're looking at 20-day basis, 50-day basis, 52-week basis, we're seeing the amount of stocks making new highs exceed the amount of stocks making new lows. Definitionally, that probably means we're in an uptrend, right? Certainly not characteristic of a downtrend market environment. So that's first and foremost. Spencer, if you want to throw up the S&P 500 Williams % R chart that I had sent over.
Yes.
It should be 9.
This is the one. Okay, so in this chart, we're looking at the...
Explain us the lower pane first.
Yes, so this is the 40-day Williams percent R. So what the Williams percent R indicator does is it tracks the high and the low, in this case over a 40-day range, and it plots where price is relative to that high and the low range. And so why am I looking at 40 days? Well, that's exactly 2 months in traditional markets. And so I was really interested to see over the course of the past basically 2 years, every time we've seen a full oscillation from the lower bound, basically oversold, to the upper bound, aka overbought, the lows of that pullback are in. And so certainly as we saw in late 2023, late 2022, early 2023, we had seen the market kind of cool down again a little bit after that overbought threshold was pierced. But generally speaking, this is a sign of really good things continuing to take place thereafter. And so this signal just flashed on Monday. I think that's really optimistic overall. So I think investors really need to have this on their radar.
I love what you're doing here. You're using overbought readings instead of to fade them and use them in a counter trend nature. You're using it as confirming evidence to confirm strength in the same direction as price, right?
Yeah, exactly. And some people like to buy those oversold indicators. I was highlighting this exact chart when we hit that oversold threshold going into Monday, August 5th. And I was saying, hey, this is actually pretty interesting. We've already hit oversold. We should be looking for a market bottom pretty soon. Oversold conditions can stay oversold for a bit longer. But now that we're seeing this thrust to the upside, JC says it all the time. There's nothing bearish about an overwhelming amount of buying activity.
So are you surprised by the V-shaped recovery? What do you make of the action just over the last, 2 and some odd weeks off of the lows?
It's been really aggressive and really fast. And so I think for investors and traders alike that, that's really going to bifurcate a lot of people, because this is, in a lot of ways, it's been a lockout rally. So people are saying, man, I was so bearish 2 weeks ago and I've continued to hold on to that bearishness. I can't buy in now. And so I'm getting a lot of DMs from people like that. On the other hand, like I just said, there's nothing bearish about an overwhelming amount of demand stepping into the market. And so when we look at these technical indicators, when we look at, the relationship with the S&P 500's price to key moving averages, so looking at the 20-day, the 50-day, the 200-day, we're trading above all three of those moving averages, and all three of them are in bullish formation. Look, this chart's kind of interesting because I'm actually taking price out of the equation. We're just focusing on the 20-day, the 50-day, and the 200-day moving average. For the bears who are out there, I hate to break it to you, but this is a bull market characteristic when the 21 is above the 50, in this case, the 20 is above the 50 and the 50 is above the 200. And so, yes, is the market maybe overbought right now? Sure. So could we be looking for a 2% pullback in the market over the course of the next week? Yeah, maybe, perhaps. Let's see. It's not my base case. But what I do know for a fact is when we zoom out and we kind of get rid of the day-to-day minutia of market movements, what we're seeing unequivocally is over the past 10 years, this is a bull market characteristic, right?
This chart also does a good job of illustrating just how far less severe the corrective action that rocked markets last month was versus the corrective action that we saw around the same time last year. You see the short-term moving averages really check back in with the long-term. We didn't even get close to anything like that here.
Yeah, exactly. And I mean, at the end of the day, what does that speak to? That speaks to the strength of this market, right? We're not seeing significant mean reversions because buyers are stepping in. And when they are stepping in, they're stepping in with force, right? And so again, like when we talk about yesterday, more than 70 stocks making new 20-day highs, more than 50 stocks making new 50-day highs, more than 30 stocks making new 52-week highs, and basically zero new lows on all time frames. And I'm specifically talking about S&P 500 constituents when I'm talking about those individual numbers. And for me, the S&P 500 is the most important stock market index in the entire world. So if the largest, most important companies in the largest, most important index in the entire world, thank you, Spencer, when those stocks are trending higher, that's probably a sign we're in a bull market regime and bull market environment. And I don't know about everyone else. I'm an investor to make money, right? So if you're not long in a bull market, I don't know what the point of what you're doing is, right? You have to be long bull markets.
Do you hedge your portfolio at all? Will you, when things get dicey out here, will you buy puts or something just as a portfolio hedge? Or no, you're staying long?
I think one of the things that I've kind of learned in my relatively brief but 10-year experience as an investor and a trader is when there's periods of high volatility like that, I tend to just do nothing. I don't want to overthink things. I didn't even trim any exposure, and I kind of let the dust settle the week of Monday, August 5th, and I didn't start buying again until that Thursday, right? So even then I felt like, man, am I chasing this market higher? And all of those purchases have done quite well so far. And so I didn't take any short-term downside protection. I just rode through the volatility. I said, I have to be comfortable with this as an investor. This is just par for the course.
You don't want to reduce exposure on a day like August 5th.
Yeah.
You could feed the ducks a little as profit targets get hit along the way, right? Get into some stuff, reduce your position in some stuff. You could always.
What's the difference? Wait. What's the difference between feeding the ducks and reducing your exposure?
It's the same thing.
Okay.
Same thing.
Okay.
Yeah.
I think another thing to point out about that is typically the best days in the stock market are clustered around the worst days in the stock market.
That's right.
So if you're selling on the worst day, you're giving yourself a low probability of being involved meaningfully in the opportunity where we have one of the best days in the market for any given year. So, it's self-implosion.
Talk to me about risk appetite. Are you overthinking some of these risk appetite ratios? I see your chart in here. You're not just talking about how there was a really swift recovery from the equities market, but a lot of the damage or some things that we saw that might have spooked some people, for example, credit spreads kind of blew out like in a single day, has really come back, and that damage has been repaired too. Throw up the
Yeah, so in black here, we're looking at credit spreads, and that's on the right-hand side. I've actually inverted spreads, right? So when this chart is going up, spreads are actually falling. And in red, we're looking at the S&P 500. And so obviously the magnitude of these moves are going to be very different, but directionally, they're very correlated. And so the thing that I'm taking a lot of confidence in right now actually is the fact that, the market is moving higher. The S&P 500 is moving higher on the back of the bond market perceiving to be lower risk, right? And that's exactly what we want to see as investors. I think the big thing that I'd be looking for here now, I want to see credit spreads make a lower low. In this chart, essentially making a new high, right? Because I have this inverted on the right-hand side. And so for me, that would give a lot of confidence that the market is seeing through any perceived risk about a growth scare, a yield tantrum, the Bank of Japan, so on and so forth, and basically giving a green light to the stock market that it can continue to move higher. So far, they're moving in the right direction together. We just want to see continued evidence of that, right? So this is a chart that I'm going to be looking at pretty much every single day.
Do you think much about Japan, or that was 2 weeks ago? We're over it.
No, I didn't think about Japan whatsoever during that period. And I specifically made a point to not talk about the yen carry trade the weekend that all of that stuff was going on, because in my opinion, it was coming on the back of Buffett reducing his Apple position by 50% and everyone worried about non-farm payrolls. And all of a sudden, somehow mainstream media was convinced that we were going into a recession imminently. I'm looking at all the data. I'm saying, I don't know what the fuck everyone's talking about. Everything looks pretty damn okay to me. I'm just going to sit tight, right? And so like I said, I didn't reduce any exposure on Monday, August 5th. I didn't buy anything on Monday, August 5th or on Tuesday, August 6th, right? I just kind of sat tight for a little bit, let some of the dust settle and said, hey, we're making a pretty strong recovery here, a pretty strong bounce off these lows. It's time to get long again, or not to get long again, but to add to longs essentially.
So yeah, Spencer, go for it.
Well, I want to ask Caleb about Bitcoin or crypto more broadly.
I was just going to say, I'm ready for crypto whenever you are.
Yeah. What's it going to take, Caleb? You sent over quite a few Bitcoin charts here. So I don't know where you want to start, but my question is, what's it going to take? Get off the mat here.
Time. It's going to take time.
Damn.
So I still remain really optimistic. I saw a great chart yesterday. Spencer, unfortunately, it was just after I'd sent it to you, but it was looking at Bitcoin's price 130 days after past halvings. And so looking from a calendar year basis, if you will, or a timestamp basis, where we're trading after the halving has taken place. And typically between 120 days to 150 days after the halving is when we really start to pick up momentum. Right now we're at day 130, 131. And so from that perspective, we're in that sweet spot now. I think we just need a little bit more time. The fact that we're seeing the stock market continue to move higher and essentially diverge from Bitcoin, or maybe the opposite, right? Is Bitcoin diverging from the market? I guess it's a nuance there. But I think that we're going to see the catch-up trade. That's my general opinion, and it's just going to take a little bit of time. And the interesting thing is we've seen stuff like this happen in the past. You can look back at 2019. There was 4 months going from August of 2019 to December of 2019 where stocks continued to move higher and Bitcoin was correcting pretty significantly during that period. And then eventually at the start of 2020 had a big catch-up trade to the upside, and then COVID happened. But the correlation came back. So, Bitcoin is a risk asset. Stocks are a risk asset. They should move together, right? And I think there's some idiosyncratic risks that might be taking place right now. That's just kind of weighing price down. In my opinion, it's just a matter of time before the correlation snaps back.
How much are you comfortable with Bitcoin or the price action in crypto dislocating, like you're talking about, diverging from the equities market? In other words, at what point do you look at a chart of Bitcoin and say, something ain't right here for equities?
That's what I was going to ask too.
Cool. That's a great question because I have a perfect chart to go over exactly that. Spencer, if you could pull up the Bitcoin versus S&P 500 chart, that would be great.
Nice.
Okay, here we are. So I drew a fib from the former all-time highs to the 2022 lows. And good news is we're trading above that 50% level. The bad news is we've been making lower highs basically since March, right? This is not a bullish signal, right? We want to be seeing higher highs and higher lows. The good news is we're still making higher lows, right? And so I think this red range, this 50% level of the Fibonacci, this is going to be really important. Again, this is on a relative basis looking at BTC versus the S&P 500. If we lose that red range, that would be a concern. And I think we're about 9% away on a relative basis. It would take a 9% decline.
And that's likely to happen in an environment where Bitcoin is completing a top on an absolute basis, breaking back into the 50s.
Exactly.
50s, right?
Yeah, exactly. And look, I mean, we've had some kind of scary wicks going into that range already, right? But the interesting thing is we've been able to flip that into support. And I wasn't looking at this chart close enough, but when I was doing some research last night, trying to pull up some interesting stuff to kind of go over, I saw this and I said, hey, this is actually a pretty significant range and we're just trading right above it and it's been holding up as support. I think people should know about this. So
if you look at the structure of something like this, the primary trend just reversed in favor of Bitcoin, right? And this would be really the first continuation pattern coming out of this textbook trend reversal. Typically, we want to err in the direction of the new underlying trend and anticipate that these patterns are likely to fail.
Yeah, and I mean, even just look at the price action in mid-2023, right? I mean, it looks like so far long ago because, I mean, in terms of price, it actually was, right? I think this has been a really good Bitcoin bull market overall. I think the asset's still up around 50% year to date or around there. Sorry, it's around 35% year to date, excuse me. But look, we went through a pretty significant consolidation in the middle of 2023 as well on a relative basis. And then what do? We resolved higher. The interesting thing about that is back then, a year ago, we weren't in this primary uptrend, right? We were trying to establish a primary uptrend and we still got that follow through to the upside. And so now that we are in a primary uptrend, I think that, again, the bias still has to be to the upside. The one thing that I was looking at on this chart is, and look, Steve, tell me if I'm crazy here, but does this kind of look like a Head and Shoulders bullish pattern? Like, I don't know, man. But so I was looking at this and I was like, could we go back down and kind of retest that 7 range? Right? Mm-hmm. So we might need to even fall a little bit further to form that right-hand side of the shoulder.
Oh, I see. You're saying with a neckline at like the lows from early this year.
Yep. Yeah, exactly.
I see it.
And, that would feel terrible, but it could give us a significant amount of momentum and kind of a launch pad for that continuation move. I was just looking at the chart and I was like, I can't not see it now, so I have to get this on other people's radar. But
I hear you. I see it. Listen,
who knows?
Would you overthink the relative trend here and an environment where this reverses, starts moving to the upside? Would you expect XLK and the mega cap growth indexes to start outperforming in a big way again too, or you want to separate those two things?
No, I think that's spot on. I mean, Bitcoin was a leader in 2023. What else was a leader in 2023? Semiconductors, mega cap tech, software, right? And so my general base case is that those same industry and sector groups are going to continue to be the leaders of this market, right? And so I brought along a great chart as well, looking at mega cap growth relative to the S&P 500. So that's MGK versus SPY. Mm-hmm. This chart, I think, is super, super important. Because what are we doing? We're flipping the former all-time highs into support, right? So we have this big corrective move after breaking out to new all-time highs. And excuse me, this is equal weight S&P.
Yeah. And what a logical level for this pullback to happen at?
Yeah. And we're flipping it into support, right? We can't ask for, if you're optimistic on mega cap growth relative to the rest of the market on an equal weight basis, it's rebounding exactly where you want to see it rebound. This is like picture perfect breakout, retest, rebound type of price action.
You could call it a hard retest, but you look at something like this, the higher highs and higher lows are intact. There's literally zero damage to the trend on any material time frame, even the short term trend here, right? Like you established a higher low, you held in, bounced back through to and through the prior cycle highs. This looks like, party on for the mega cap.
But what about the mega cap bubble, guys?
You mean the companies with the best fundamentals and the best earnings and the highest growth rates?
We're in a concentration bubble.
Yeah.
No, but really, what do you make of some of these big AI cycle leaders have experienced some damage? Supermicro. I think you could throw Dell into that conversation. AMD with a big save this week. But, the Supermicros and the Dell, do you want to lose those AI leaders? Do you overthink that? Do those tops concern you or no?
I'm actually not even looking at any of those three stocks very often.
Really?
I think for me, I want to look at the industry groups more broadly. So I just want to see how is software performing, how are semiconductors performing on the aggregate. Because some of these stocks like Supermicro, I'm not following them on a fundamental basis to be able to justify did they warrant that growth in the first place. I don't have the answer to that. Maybe they did, maybe they don't. Right? I don't know. And so for me, the industry group or the sector as a whole is what's going to be more important for me. And so, I also brought along a chart of the iShares Expanded Tech ETF. Steve, we talk almost every week, right, on Spaces or otherwise. I'm always talking about this ETF, the iShares Expanded Tech ETF. This looks like a cup and handle setup to me. We're cooling off so far year to date along the former all-time highs, but we're coming right back into that zone. I can't not see this 161.8% extension, which lines up with a measured move target from the 2022 lows to the recent highs. And look, they line up perfectly together. Could that just be a coincidence? Maybe. This is a very speculative call that we could basically have another 34% upside as the calculation to get there. But man, I've done some studies recently looking at potential upside for the NASDAQ, for the S&P 500 based on volatility, based on, these momentum thrusts that we've been having. And I'm seeing anywhere from 20 to 30% upside in the market. So if the market has 20 to 30% upside in the market 1 year out, on average, what are the best, largest software stocks in the world going to be doing, right? Last point on this, 5 largest stocks in this, Adobe, Oracle, Salesforce, Intuit, and Microsoft. Aren't these companies that you want to own? I sure do, right? These are some of the biggest stocks that I own in my portfolio for the long run. And so, if those stocks have that kind of upside left in the tank, that's beautiful for the rest of the market because they're so big, right? They have such a heavy influence on the market as a whole.
This is IGM, right?
IGV.
Oh, sorry.
What a great vehicle this is. Yeah, I'm with you, Caleb. Software stocks, I think, are like the best stocks in the world, the best stocks known to man. These businesses are absolutely incredible. They could scale like nobody else. The fact that they're not even back above the prior cycle highs yet, this is an orderly bull market, is what this chart illustrates, right? You can't go in a straight line higher forever. It's not sustainable. You get a nasty blow off top. It doesn't end well, right? Parabolic uptrends. Something like this, orderly, runs back into such a logical level of overhead supply, then goes straight sideways for, 7 months now.
Yeah.
Digestions and consolidations like this along the way, like you said, to build up the fuel for that next leg. If this little rectangle resolves higher, you got to get behind it. And in fact, you could play it this way with this vehicle, like Caleb says, a bunch of awesome leadership names are rounding out this fund as the largest holdings. It's a good place to be. And then you can define your risk perfectly right here at the pivot highs and the prior cycle highs.
Yeah, I completely agree. And, one of the reasons mathematically why this hasn't made new highs yet is because this got absolutely thrashed in 2022. This was down 45% from the highs, whereas the S&P 500, I think, was down around 22, I think at the peak from an intraday basis was down about 25%. So, sequence of return risk, we have to gain a lot more to break even, essentially, from those former highs. And I think we're going to do that. We're going to achieve that. Wow. On top of this, I think another important thing, I didn't bring the charts, but, for the people at home watching, pull up SKYY, pull up IPO, pull up ARKW. These are the smaller cap versions of this, but it's all software, it's all internet, it's all kind of the innovation theme, if you will, all heavy on the risk appetite side of things. And they all look not this strong, but in terms of the price action over the course of the past 3 to 6 months, they all look like this, right? And so they're trending sideways. They're right back at 52-week highs. They just need to achieve these breakouts. And so whether we're talking about the large cap names in this industry group or even the small cap or even the IPO versions, looks really good across the board.
And
Shout out sequence of return risk. And that's probably the first mention of that on this show ever.
And there's an interesting comment in the chat from Dawson. You're not wrong. Software has been the most disappointing tech sector of 2024. Do you favor certain software names over others? For example, that's true in the case of application software. I'm seeing 3% on the year. It really is just about at the bottom in terms of tech industry groups. But enterprise software, infrastructure software, up like 17% on the year. Do you differentiate between the different software names?
You know, I really pay attention to the ones that I own. So I'm happy to go over some of those. We can pull up ServiceNow, ticker symbol NOW.
I mean, what a beautiful scoop and score, failed top this was. And just, we talk about it. This is from failed moves come fast moves. It will put in the textbooks one day. We'll get it.
Yeah.
It was that good, and it happened a lot sooner than some others. Like Uber looks like that now. ASML looks more like that now, right? But ServiceNow did it a few weeks before them.
Yeah,
we got to start here.
Yeah, coming up.
It held up extremely well, and as you pointed out, it just snapped back beautifully. And this was showing a lot of strength in the market even before we started to see more broad market weakness. You know, I'm showing the 200-day moving average cloud. I combined the EMA and the SMA on a 200-day basis. That's rising, that's sloping higher. We didn't rebound on it perfectly, but close enough. If you bought that retest, you're very happy with yourself today. And so this is basically on the verge of making new 52-week highs. We had a little bit of a false breakout there, but we've come roaring right back. I also brought charts for Intuit, Oracle, and Palo Alto Networks. Pull up any one that you want. They all look really strong, very similar to this, basically trading above the former all-time highs, consolidating and then achieving the breakout, using that 200-day moving average cloud as support. You know, one of the reasons why I'm showing this kind of dynamic is if you look at that price action in 2022, we were using that cloud as resistance. We flipped above it in January, February of 2023, and we've been able to use it as support the entire time. Again, that's a bull market characteristic. Until we can see a sustained material breakdown below those levels, you have to be long and strong in this market. Otherwise, I think it's being irresponsible.
I love the Intuit chart too. Throw up the Intuit.
Intuit's a really good one. Again, this is another stock I own. I probably don't own enough of it. That's going to be okay though, right? So,
find it. Don't mind charts, trying to find Intuit.
Such a monopoly. I love me some QuickBooks. You guys dabble? Oh God, do I love me some QuickBooks.
Yeah, it's a good time.
I hate QuickBooks. I just wanted to say hi, Caleb. What's up, my man?
JC, good to see you, bro.
Dude, great to see you. I really appreciate you being here. I had some stuff I had to do, but I was listening in. Huntington Beach, what are the dates? Huntington Beach, September 15th through 18th. You're not far. Where are you? Santa Barbara?
Santa Barbara.
Yeah, you're a little far, but not that far.
I could come down to see you guys. Come on, what are we talking about?
You better. That's all I'm going to say. We're not going to go up and see you, but you better come down and see us.
Yeah,
well,
exactly.
Living out there, you got to get together with Brian Lund. You got to go see the guys at the studio, right?
Strazza, California is a big state. Like, it's the whole
he's not over there? Okay.
It's a big state.
He said Southern California, though. Those things are in Southern.
Yeah.
Stretch.
We're close. We're close enough. I can make the effort. Yeah, because I'm going to be leaving in mid-September anyway, so I'll probably come see you guys down there, and then I'll jet out. So that'd be awesome. That'd be fantastic.
Where are you off?
Forward to that.
Where are you going?
I'm gonna go back to Bucharest, Romania.
Nice.
Yeah.
You really liked it out there, huh?
Yeah, man. I got some really good friends out there. Made some really good connections. The city's beautiful. It's safe. It's clean. It's affordable.
Sounds like there's a special lady friend that you might be visiting.
That is what it sounds like.
That's what it sounds like.
Going back so soon.
All right.
Look how red he's turning. Look at him.
On that
the
note,
vein coming out of the forehead.
Dude,
I got you.
I'm busted,
it's
huh?
Perfectly normal, Caleb.
Yeah.
It's just science. It's okay.
Yeah.
Before we make you blush anymore, we should get him involved in the NVIDIA thing, guys. That'd be fun.
Oh yeah, that'd be good.
What's the NVIDIA thing?
We'll talk offline.
Okay. Really good to see you guys, man.
The link to Caleb's Substack is in the description right below this video on YouTube. Cubic Analytics. I highly recommend you check it out. Caleb Franzen, coming to us from America for the first time, actually, I think.
Right. Seriously, dude. Welcome to America.
Yeah. Really good to see you guys, man.
Thanks,
care.
Man.
Adios, my man.
Peace.
Caleb Franzen.
Oh, man. A lot of good stuff there.
Caleb Franzen dropping some JC-isms there. I don't know if you heard those. There were some JC-isms.
What, like sequence of return risk? That was my favorite part.
That was definitely not a JC-ism. There was a few in there. I'm not going to call any out. You guys, if you know, you know. If you know, you know.
let's talk about some news here. We had some earnings. We covered them a little bit with Kenny. The TJX, which is up, Target, which is up. Target's up what, like 15% now, 20% today for Target. Oh my goodness gracious! Yeah. So their comparable sales actually grew for the first time in I don't know, like a year maybe. Sales grew 2% year over year. So the shrinkage maybe not so much of a problem there as it was. I'll always remember Target as the company that like totally butchered the COVID inventory situation. They were like totally caught like offsides both ways. Like they didn't have enough, and they had way too much, right?
Yeah,
and it was like, oh, well, what do we do here? So
the CEO
anyway.
wasn't replaced for that.
What?
It's the same guy, right? The CEO was never replaced.
No. Anyway, they raised their guidance for the year. It was a good report for Target. I mean, look, 20% up this morning. It's a good report, and not like that's what there is. So,
You know, they're really speaking of CEOs, they're really coming after the Starbucks CEO in the media. You see all these articles about how he's going to take a private jet to work and commute.
yeah, I did see that. That was pretty funny.
Why don't they leave this guy alone? Companies.
What's the problem with taking a private jet to work?
Well, first it was like he moved the Chipotle headquarters when he joined Chipotle. He moved the headquarters.
Yeah, okay.
Because he's from California, I think. So he moved it from Colorado to California, and he made everyone move there. And now he left 7 years later or whatever. But he's not going to be moving to Seattle. He'll be commuting
for obvious reasons.
Yeah.
I can't speak to Seattle. I've never been there.
Apparently, it was in his offer letter, which they had to make public. So the media outlets are just all over the
nice.
Where are they moving it to?
They're not moving it. He's going to commute in a jet 1,000 miles from Southern California to Seattle.
All right. So what's wrong with that?
I'm saying nothing, but ask the Wall Street Journal. They might feel differently.
Oh, they butthurt that he's going to take a private plane to work and they have to take the subway?
It sounds that way.
I think calling them butthurt is a gross mischaracterization. Just because something gets coverage does not mean people are angry or annoyed by it. Something is newsworthy if it is unusual. And it is definitely unusual for a CEO of a major corporation to telecommute essentially to work. That's unusual. So anyway, let's go back. Target.
I've seen I've read like articles about like these hacks where like people live like in South Carolina, but they work in New York City.
Yeah,
so the cost of living is like nothing, and they're saving money by flying into LaGuardia every day.
Good for
or
those
like 3 times a week or something like that.
It's an ARB. Why not trade it?
Yeah.
Also, can we talk about the JD.com? Because this one's down 8%.
I want to get there.
Explain to me what happened here. Because just when these Chinese online retailers started to look good, what happened?
Walmart has sold or is in the process of selling its entire 5% stake. They were, I should say, the largest shareholder in JD.com. They have gotten with Morgan Stanley. They said, we want to sell all of this stuff in one fell swoop. That lot has been fully subscribed, according to Reuters. So they have found buyers, or a buyer or multiple buyers, for the 111 million shares. I think somewhere around there.
I wonder what the basis was. Do we know
144 million shares?
Do we know when they made this investment?
That's a very good question. 2016 is when they became a shareholder of note. I don't know when they became the largest shareholder, but they've been in since 2016.
I think this could have something to do with the fact that they're just back to break even on it.
Or maybe they're just like, why are we messing around with this Chinese garbage when we're just crushing it and everything else we're doing? Like, why are we messing around with this nonsense?
I wouldn't say that because according to Reuters, here again, it's pretty reliable when it comes to M&A stuff. They say that Walmart is going to double down on Sam's Club in China, specifically in China, right? So they're not getting out of China. They're just getting out of JD.com.
Wow. That's
Do
interesting.
they have a lot of other investments that they do this sort of thing? Because I mean, whatever's going on in these stores, like I don't know anybody who goes to Walmart, but somebody's going. They're doing something right.
They,
I mean, yeah, they buy a lot of companies.
they acquired Jet.com.
I was going to say Jet.com. That was the big one.
Really?
That was their big one many years ago.
Yep.
And is
Yeah.
Jet.com like the
Jet.com had a very strong online retail presence, and that was something that Walmart back in the day was not good at. So it was more of a strategic purchase in that sense to help them build out their online world.
so Jets.com isn't like renting private jets.
No, Jet.com is an online retailer, or was. I don't know if I think it's Walmart.com now. Like it doesn't still exist.
Yeah, it doesn't exist. Okay, so JD.com. So anyway, so the stock is down.
Yeah.
What? It's down like 7% this morning, but only like again, Walmart. They have buyers, right? Like the lot is fully subscribed. There are buyers here, so it's more so just a sentiment thing, right? Because the largest shareholder is getting out.
You considering do you consider Walmart puking down here? You think that's a bullish catalyst?
How many times have we suggested, oh, is this maybe the bottom in China? Oh, you know, so we're waiting for that signal.
Well, China's not making new lows, so it bottomed a while ago.
Sorry, I meant I meant to say the sentiment washout. That's what I meant to say.
It's a prolonged bottom, though. I mean, these are just monster bases we're talking about.
I mean, the low was in January, so I mean, you know, in the FXI. But
Yeah.
Strazza, do you think that this capitulation in Walmart, would you consider that puke like bullish, or is this a non-event? I look at it as a non-event.
No, I don't think it's nothing. I don't think it's not. Dude, it's just added information to what we already knew, which was sentiment for these stocks has never been so bad in my career, probably never ever.
Yeah.
And it's a massive market, and it is now freakishly underinvested by managers and investors around the world. And that's a setup that I like. I don't want to.
Yeah, this is just more information on that front. All right, I agree with Strazza.
And JC,
it's not irrelevant.
We don't want to come out here and be super bullish on Chinese equities, but we're going to do it if it makes sense. And the way this is setting up from a sentiment perspective, and you see these monster rounding bottom patterns, you know, that they've been working on for 3 years now. I like the setup. I do like the setup. I like it a lot. I'm starting to love it. Have you heard?
Do you want
Jeff
to
Bezos
talk about this coal merger?
What?
You asked about this coal merger in Slack this morning. You want to talk about that?
EIX, Arch.
Yeah. We have an old-fashioned merger of equals, an all-stock merger of equals between ARCH and CEIX. Here's the bottom line. If you own shares of
Both.
no, hold on though. I'm gonna do the math for you. If you own shares of CEIX, take that share price, multiply it by 1.326, and that should be where Arch trades at, and vice versa, right? Arch divided by 1.326, that will be what CEIX trades at, or yeah. So
I love the merger math. Do we know which one disappears?
Well, yes, because the Arch shareholders will receive console shares. So Arch is going away.
Got it. So if you own both, then you will simply own more CEIX soon.
Yes.
And no Arch. Okay, great.
Yes.
All right, cool. Can we get our
Can we have? I just want to do something fun here, quick. I think you're gonna like this one, Strazza. Go back to the Arch, please. Arch used to be called Arch Coal, and they decided in their infinite wisdom to change their name to Arch Resources so that people would forget that they were in the coal business.
Yep.
This change in name took place on May the 15th of 2020, approximately 2 weeks after the stock bottomed.
How do you remember that?
I don't. I looked it up.
We see it all the time.
I knew it was right around that area, but I didn't know the exact date. But man, so they decided to change the name as the stock was crashing, and they announced it after the stock had already bottomed. But it's that sort of thing. It's that sort of sentiment that we want to pay attention to when their own company's like, you know, maybe it's just better that we don't tell people we're in the coal business. That's how bad the shitty coal business is. Well, Man, look at that. What are we talking? We're talking 10 bagger after that name change.
We had some great sentiment data around coal near the lows in 2020. Another one was they stole our coal ETF from us. That was the old ticker symbol KOL.
That happened like a few months after the name change. Like it was all happening at the same time.
So I would like to request our friend Matt Warder. I would love to talk about this space with him. This is a space that people were getting really bullish on, and it's been terrible this year.
Matt Warder's in New York right now, actually.
Not so bad this morning. Whenever there's one big deal, they like to circle, right? So every coal stock, I mean, Peabody is up 8% this morning. What else is going on?
Wow. So this is going to be let me make sure I'm saying this right. The thermal coal stuff. This is not the coking coal. The coking coal, coal, that's like AMR. You're not going to see the same kind of bid there because it actually is a different business, even though they're both coal. It's the thermal coal names.
Correct. Although AMR is also up 4% this morning. So,
that stock's down 50%. Best performer off of the 2020 lows. It's in a 50% drawdown now.
Did they stop buying back their stock or something?
They must have. They better start.
Can we do hot corner? Big biotech. Big insider buying in a biotech that we need to talk about.
I know you know this name from back in the day, too.
Well, I was going to say blast from the past, right? No doubt.
Is it?
Oh,
For me, it is.
Oh, yeah. What is it, like muscle?
Hot corner. So hot right now.
Yeah. So Garmin stands out too. Political filing, Microsoft and Garmin. Garmin's got a great chart. Boat people love this business. Sarepta Therapeutics. If you zoom way out,
what are you talking about, bro? Like, let's get down to business. This is a big transaction, dude.
Sarepta Therapeutics. If you zoom way out on this one, look at like a monthly chart. I mean, we've been waiting for this breakout literally all of my life, 25 years now. That level would be about 168. Michael Andrew Chambers. This is the CEO. So $5 million from the CEO. Pretty good. Pretty good. And this is what I'm talking about. It's like every day we come to our desk and there's another standout purchase in the biotech space. This is just the latest example of that.
Why do you say that this is a blast from the past out of curiosity? What does that mean?
Because this is a monster.com bubble base that we were talking about back in 2018 when it was close, back in 2019 when it was close, and it's still close, but it's just gone straight sideways for like 6 years now. This is a big story stock. A lot of buzz around this one earlier on in my career. People are always talking about Sarepta. It's just one of those names. Spencer, did you have a similar experience?
Yeah. Also, they were working on this drug for Duchenne muscular dystrophy, which is a rare form of a muscular dystrophy. They're working on this drug for a very, very, very long time. And remember, we discussed this a few months ago. They finally got approval. They were working on this thing for like a freaking decade, right? And they got approval like in June or something. I don't know. And it was like a long time. It was like a big relief. It was a long time coming. It was a nice conclusion to that story. And I was very happy to see that because, anytime you can develop a drug that successfully treats rare diseases, it should be celebrated and rewarded. So,
and shareholders should be compensated accordingly. Is that not right there, Spencer?
I believe they were. If you look at the chart,
that would be communism.
If you look at the chart, what happened in June, there's a giant gap up there. So, of course, it came back to fill that gap, but who's counting?
It's a big base, man. This thing is no joke, man. This thing is no joke. And this insider, and he is where on the inside is this particular gentleman, Mr. Michael Andrew Chambers?
He's a CEO.
Oh, he's a CEO.
Yeah, man.
So that's almost as important as the CFO, according to Steve Strazza, right?
Listen, you get either of them buying $5 million, pay a lot of attention.
It's only $13 billion. This is one of those, like, there's only like 5 biotech stocks that are between $10 and $30 billion in market cap.
Dude, I told you
much
my
bigger
idea.
Or much smaller.
The way we're going to do it in the future is 1 to 10 is a sweet spot. They tend to be companies that are like right on the cusp of approval or who just got
This was
approval.
13, so we're going to leave out Sarepta because it's not under 10. There's only like 3 stocks above 10, between 10 and 30 or something like that. Why wouldn't we include them, right?
There are, let's see.
Not many. And by the way, the fact that this is one of those few names that is in that market cap area, does that make it ripe for a buyout? Is that like an inherent catalyst built into this long position or no?
There are less than 100 names between 1 and 10. There's a lot, man. There's a lot. It's once you get above 10 that it's like game on. There's 28 biotechs in the IBB that are larger than 10 billion.
But how many are between 10 and
list.
30? How many are between 10 and 30?
About 100.
No, between 10 and 30.
Between 10 and 30. So that would start with the Biogen, which is the 10th largest, and go down to the Legend. There's 18 between 10 and 30.
More than I thought. More than I thought. But still.
Point of clarification from the chat that this guy is he's on the board. He's not the CEO, but he's on the board of Sarepta.
$5 million bucks, man.
It's a lot of money.
Yeah, it's not a piker purchase.
No, it is not.
Yeah, no, I appreciate that sort of thing.
All right, guys, if you want the hot corner, it goes out every single day. It takes maybe 30 seconds to consume and internalize and understand in your brain. It's got all the biggest insider transactions from the previous day, politicians, executives, hedge funds. Get it, QR code and the link in the chat. It's free every day. All right, shall we bring on Mary?
Please.
Because it's Wednesday, and on Wednesdays we do Mornings with Mary. Cool.
Hey, Mary.
Good morning, gentlemen. How are we doing today? Bless
Hey,
you.
thank you. Thank you.
Excellent.
Good to hear. So, is Steve around or did he just pop off? Normally I like to talk about what I've been trading, but most frequently it has been trades from our brand new service, Breakout Multiplier. And I want to come at this from just kind of a consumer standpoint because I was always first and foremost a consumer of all of the research that you guys do. This service has been game changing for me from the standpoint of I've been crazy busy for the last 2 or 3 weeks with customer service and talking to our members. I've not had time to trade. I actually was joking with my husband. I don't exactly know what I'm going to talk about because I've not looked at charts in weeks. But what has been game changing for me with Breakout Multiplier is I get an alert right to my phone when Steve is putting on a trade. I quick look at the chart, I get into the options chain, I put on a trade, and I'm right back to work. Like it takes me maybe 2 or 3 minutes at most. And so I've been participating, and I'm not an options trader either for that matter. So I've loved our option education. I probably have done less than a dozen option trades in my life. And so I'm learning a ton. And this, like I said, for me as a brand new options trader, working professional that doesn't have a ton of time during the day, this service has been game changing. And then of course, I mean, we could talk about the gains. That's been life changing as well. So
the success of those trades, I think, probably adds to your enthusiasm here, Mary. You see,
absolutely. So give Strazza his flowers when he comes back. I'm a very happy customer and consumer. Obviously, I know everyone would probably be in the chat saying, "Well, yeah, of course. Oh, we've got the cat. Of course, she's going to say that." But you know, I'm just trying to keep it real. You know, I've been super happy from the consumer standpoint because, like I said, I was a consumer of all your research first and foremost, and I love this product.
You're in the Palantir?
Oh yeah, that among many others, yes.
Two things. Throw the link on there, Spencer. Yep. But I wanted to double click on something that Mary just said. As far as she doesn't have a lot of experience trading options. This is not an option strategy in the Breakout Multiplier. This is all of the inputs all come from the common stock, right? So this is a technical analysis strategy. Even the volatility analysis comes from the common stock, not even the options. It just happens to use calls and puts in a very simple way in order to express a thesis in the market. So I just wanted to sort of reiterate what Mary was saying. This is not an option service, right? This is nothing to do with options other than the execution of it, right? Right, Strazza?
Yep,
I know you always like to say that.
Yep.
And quite frankly, I've been long Palantir, the common for a couple weeks, maybe a couple months, just kind of waiting for that one to take off. And I feel like I'm always pinging Steve. All right, Steve, where's the juice? Where's the juice? Where's the juice? And so when that trade came along and was already long the common, this was just another way to kind of juice that idea for me. And it's it's worked out really well. So again, kudos to Steve and the team for that call.
One hole says you got a nice tan, Mary. Where you been getting some sun?
Been out on the boat. Thank you. Yeah, so it's summertime here in Michigan. Beautiful. I mean, this is when you come and visit Michigan, is in the summertime. So been out on the boat.
Summer there? Winter isn't that winter there yet? Isn't that coming now?
No, not yet. But yep, been out on the boat. You guys were talking about Garmin, which I mean, all the boats either have Garmin, sonar radar technology, or Raytheon. Those are the two names that I see all over. Boots on the ground research.
I always look when I go on my friends' boats. I go into the cockpit center, and I'm always like looking around. They're like, "What are you doing, man?" Like just trying to touch technology, see what you're working with here. I always see Garmin, so it excites me when to see.
That's
stuff.
why the stock is doing what they're doing. It's not like the old Garmins from back in the day that we remember, because all the cars, right? It's the boats.
GPS. You're talking about the GPSs? Yeah. No, it's boat stuff now, I guess.
Yeah, we had one of those. You guys remember TomTom?
TomTom, I sure do.
Yeah.
Magellan was another brand.
That's a good name for GPS, actually. Okay.
Magellan is a good name for a GPS. That shout out to Magellan.
History. We're talking about history.
Yeah. Totally.
Or during recess, is that what's happening?
Please.
All right.
I want to give a shout out. Next Wednesday, we got NVIDIA earnings. Fun fact, NVIDIA is 4 times larger than the second largest U.S. semiconductor. I don't know if everybody knew that. 4 times larger. NVIDIA also represents practically 20% of the entire S&P technology index. For perspective, so 20% for NVIDIA. For perspective, Apple is 4%. So now it's almost 5 times larger than Apple in terms of the weighting in the technology index. So as somebody who thinks that earnings are stupid and kind of a pain in the ass for the most part, next Wednesday is going to be a big deal. And we will be right here live streaming. Right? What do you say? Wake your neighbors. What do you say, Spencer? Wake your neighbors.
Tell your friends
family.
and neighbors and your neighbor's mom's cousin.
Send them the link. 3:45. We're going to be here. Maybe we get some action. Maybe we don't. But if we got some action, I'm putting on trades. Let's fucking go.
I'm glad that we're finally doing this. I think this is important. I think we'll do this a lot more in the future. If you joined last May, after their first earnings report, I held an emergency Twitter Spaces, and we talked all about how this was the greatest earnings report in the history of the stock market. And now 5 quarters later, they just keep coming out with hit after hit. So we're going to get live, talk about it, talk charts, but also just kind of digest the earnings report live and bring on some of our smart fundamental friends to have those conversations with us.
Guess who's besties with the founder of the Quarter app?
You?
Straz is so excited. Straz is so excited.
Yeah, the analyst team, that was a big win.
Happy for you. My recess real fast. I have a documentary recommendation. If you have any nostalgia at all for the mid to late 90s boy band craze, and I do because that's when I grew up.
Already watched it. So
good documentary on Netflix. It's called Dirty Pop. I'll summarize in one sentence. It turns out that the entire boy band craze in the U.S. was funded by the longest running Ponzi scheme in American history. Now, if that does not get you interested, I don't know what will. You got 90s boy bands, you got Ponzi schemes. What's
Bernie
not to love? No, not Madoff. Another one. Yeah.
So many Ponzi schemes.
So many Ponzi schemes.
Is this the top for docuseries on the streaming apps?
Oh, God, I hope not. I hope not. I love them so much.
I mean, there's 3 new ones a week. And when HBO Max does one, like the Lacey Peterson, then Netflix is coming out with the Lacey Peterson story 2 weeks later. Like they all do the same ones. You notice that?
Yeah. Well,
bullish documentaries. Bullish
True
documentaries.
crime will never go away, Steve. So get used to it.
I watch.
All right, Mary, what do you got? What is this?
All right, so my kids went back to school yesterday. I know, JC, you were talking about preschool orientation. So mine went to school yesterday. I've got 3 kids in 3 different schools, which is crazy, So now I'm running to 3 different schools every morning. But anyway, last week I wanted to make sure they had like the best week of the last summer vacation. And so one of the things that we did that I've not done here in Michigan, which is surprising because I've lived here my entire life, is something called the dune rides. And so just 30 minutes south of me is a little town right on Lake Michigan called Saugatuck. And they do these dune rides where, I mean, we get in these old, I don't know if this was a Dodge or I don't know. Anyway, refurbished thing where you get pile in and it's like a roller coaster just on the sand dunes here in Michigan. And what's really fascinating about this area is used to be just all white pine forest. And they gave us the whole history of the kind of how these dunes were formed, especially right here in this area. But what happened was a town was built there in Saugatuck named Singapore, and white pine forest. After the Chicago fire, Chicago needed a ton of lumber to rebuild. And so they started cutting down all the trees. And then as a result, all this erosion happened and sand started piling up, and it actually buried the town. So there is a town from the 1800s buried under this sand dune that we were going up and down and around. And so very fascinating, very cool. Obviously, it's become a state park now where they're replanting trees and sandgrass to kind of keep things in place so that things don't continue to shift around. But we were going, up and down and sharp curves. And this was fast. And then we would stop and take pictures and learn about, things. But my kids loved it. I loved it. So it was great for all ages. So if you're ever in Michigan, I highly recommend the dune rides in Saugatuck. They are right on Lake Michigan, and it's a beautiful location, and it's a lot of fun. Yeah. So we were like, whoa.
Awesome.
And then I've got one last picture. I'm going to see if Spencer, you'll know right away. But I'll see if JC and Strazza can. There was a vanity plate on the front of this dune buggy that we were on. Did you add that to the Slacks?
That's what that was.
Show?
I couldn't.
Yeah.
I didn't look closely enough.
You would figure it out.
I didn't look closely enough at it. Yeah, 1 second.
Lived in Michigan for 7 years. That's a long time.
He should be able to figure this one out. This is one of those if you know type of things. So it's a vanity plate on the front of the truck, and we'll see if you guys can figure this out.
What the hell is that?
So do you know what that is a picture of?
No.
Yeah. So here's Michigan. What's above Michigan?
That's the UP.
The
You
UP.
guys with the hands.
Yeah. So that's the UP. That's the Upper Peninsula of Michigan.
Oh,
And
I get it.
so,
It's yours.
I heard I need to go there.
Little Michigan humor for you.
I
can't
heard I
wait
need to
for you
go
guys
there.
to come to the Midwest here in September for Chicago and Portfolio Accelerator.
Wow.
Last time I was in Chicago, I was partying with Mary.
Yeah, that's true. Saries. Whew, those drinks were strong.
Next time
All
I'm
right.
in Chicago, we'll be partying with Mary.
That's true.
Mhm.
Very true.
All right,
All right.
guys,
Chicago's
back
a
to
party
work.
with Mary. What can
We're
I say?
done. See you guys later. Smash the like. Thanks, Caleb. Thanks, Mary. Thanks, everyone in the chat for hanging out. Go make money. Check out all the links in the description. See you guys tomorrow.
Adios.
I can't take no